guess based on charts is we'll probably go to 12 or 13,000 by November-ish. And then I think getting into 2023, I think we bottom out. My guess is we stay sideways and chop kind of, you'll get these, 30% up moves, 20 down, 40 up, 40 down, kind of move, a lot of chop. So a basis point is 0.1%. So it's really tiny, right? It's just 0.1%, not even 1%, 0.1. So 75 basis points means it's 0.75% was the Fed funds rate raised, right? And basically that's the level that what the Fed charges to lend money. And it basically what it does is it sets the kind of the floor on what banks charge you. Banks are always going to charge more, right? Because if they get X from the Federal Reserve, they need to charge Y to make money. So again, that's really what it is. But essentially to kind of put it in super basic terms, the more interest rates go up, the more people pull money out of risk assets that are risky and say, oh, well, instead of taking risk here, I can get a guaranteed rate of return over here. And that's why it tends to slow the economy down. It sucks money out, which is why Jerome Powell's raising rates, because inflation is so high, he has to suck money out of the system to slow inflation down. I mean, inflation is still it is high in terms of like people. If you go to the grocery store, if you buy anything these days, prices really have gone up. So he's been feeling the pressure, I think, politically too, right? You're in a midterm election year. Biden wants to have a shot at keeping the Dems in control. And so people aren't happy that when they go to the store or they fill up their gas tank, it's costing them a ton of money. So we have to get inflation down. Inflation really is something that sucks because if you have a 10% inflation rate, it means that $1 you have today, next year, it's only worth 90 cents, right? And so if you think about that, the money you're making today, if inflation stays high, it's worth pennies on the dollar in a few years. And that's why, you have to bring down these inflation numbers. So again, the idea here is he did raise, he's been raising a lot. The reason, and this is really counterintuitive, the markets are ripping right now after he raised. And most people would scratch their heads and say, why is the market rallying on this? And the answer is this, is even though he raised 75 basis points, he basically threw the market a bone saying, we're gonna be a little bit more cautious. We're getting close to the end of hiking. And I know, again, this is counterintuitive, but the market is so concerned that he's gonna overhike rates and drive the economy into a nasty recession, and that it actually is happy that he's getting close to the end. They're hoping inflation comes down from here and that he's done hiking, and then boom, crypto can rip again. So basically right here was where the announcement came out. So you could see what crypto did from that point, just ripped to the upside. He was more nice to the markets in terms of his commentary. He wasn't so hard-nosed. The other term is hawkish, where he's going to raise more and more and just kind of crush the markets. So he was a little bit more dovish. The market loved that. Bitcoin loved it. We've seen all of crypto rally here. The stock market's rallying. And in all fairness, we've gone even as far as to see the US dollar starting to come down, because let me put up the DXY. This is the dollar, and look at the dollar collapse on that statement. So
wow.
The dollar had a big drop here. And the idea here is that if he's not going to raise as much, then it's likely that he'll start printing again. Therefore, that's more dollars in the system. So this is very whacked. Trying to describe the way this is all working together is really messed up, because you could say, okay, well, if he's going to print more money, then isn't that bad for inflation? But the markets are more worried about a recession right now than the inflation side. We know the inflation's coming down. Look at gas. All these things have collapsed. So this is the gas chart. You can see this is the daily gas chart. So this was June 3rd up here. So you can see gasoline has come down. That's going to bring down inflation. It's taking less money to fill up their gas tanks. And so again, we will see inflation come down. Now the market likes the fact that he's maybe closer to being done raising interest rates. So we're going to connect these lows here, all of these lows, and I'm going to stretch a line right up. And look at how there's symmetry in that we hit the low, we came up, we touched here, we came down here again, we then came up, then we came down again, then we just hit the high. Then look at what we did yesterday. So for instance, look at this. Same exact thing right here. So
wow.
You just basically played pinball inside now this is one of the things you have to be careful about if you're in crypto. What did this pattern do? Eventually, it broke lower. So you have to be a little careful because the same thing is occurring here. Even though I think we're going up to at least 25.5, which would be this upper area here, I would be a little careful because it does potentially signal at some point we could come down. Now, the beautiful thing about technical analysis is if it breaks above here, guess what? Now it failed. Now the bearish pattern failed. Now you think about further upside. So there's not only levels to buy, but also there's levels to say, okay, now it's broken where it should have pulled back, and now it can go up more because it's broken that level, right? Start to see these things where it gives you clues. It's like Blue's Clues. It's like dropping little clues here left and right about what the ultimate outcome could be, or at least the higher probability outcome is. And as a trader, you have to be able to read those, and then you can position yourself to maybe make money on them. So one of the things, and a couple things, so I actually am in somewhat in alignment. I have a 12 to 13,000 target on Bitcoin where I think it's going to go. One of the reasons why I don't think the 17.5 is the low is because a lot of people think it's the low psychologically.
Yes.
Yeah, psychologically, the markets tend to push you to the maximum where people will give up and just throw their arms up. And this is why emotion is such a detriment to investing and trading. You have to trade unemotionally because the markets know pain points. The market has an amazing sense of where it's going to push the majority of people, where they're going to throw in the towel. And then as soon as they all sell, then price is going to go up. And I don't think we're there yet. We haven't seen, crypto is still on everyone's tongue. In 2018 and 19, after the 2017 high, no one talked about it. In fact, there were a lot of people saying it was dead, and that was the bottom when you saw that type of thing. But let me show you this. So if you take this high of 69,000 and you drop it here to this low, so you can see this was a pretty direct drop. Then you went into this sideways pattern, which we had shown before, right? This parallel sideways. So what you do is you take this distance here to this distance here, and you take that distance and you take this high pivot and do that same distance drop, and what you get is $12,000 to $13,000. So the idea is that this will replicate here when all is said and done, and then that has a good chance of being the absolute bottom on Bitcoin. So there's no guarantees again, but for me, that's where I will buy the majority of my Bitcoin. When it goes sideways like this, what it's telling you is that all those sellers that are taking profits are being met with buyers on the other side, and they're kind of they're buying all those coins from those sellers. And that's a bullish sign. What it tells you is even after this run, there's buyers still willing to buy in, and bull flags by their name tell you that price is likely going to go up. So I am bullish on Ethereum here. I think, again, we're looking for a break of around 16.25 here. You get through that, 1,715, and then 1,900 is your upside on this. I'm a trader with an 80% success rate, meaning 8 out of every 10 times I win on trades. And I go in thinking, this one could be my loser. I'm going to be careful here, right? That's the difference. The winning mentality is the defensive mentality, because you know what you can't do in trading? You can't blow up your account. My guess based on charts is we'll probably go to 12 or 13,000 by November-ish. And then I think getting into 2023, I think we bottom out. My guess is we stay sideways and chop. Kind of, you'll get these, 30% up moves, 20 down, 40 up, 40 down, kind of move. A lot of chop, kind of like what we did. Like if you look over here, right? So let me go back to 2017. So this is where I think we are in the cycle of Bitcoin. So if it's following the same cycle, this was the big run up. Obviously, the current cycle we had an M top. It had a kind of an M pattern instead. But I think 17,000 was right here on Bitcoin in 2017. I think this is what we're probably getting right now. And then look at what happened. We kind of came down, we went up, we came down. So I think we're going to see a lot of this kind of choppy sideways action. And then this is what happened, right? We had that one more down move to make the bottom. And then that was it. This was the beginning of the bull run, right? The mega move up here. And then we did a full retrace, right? Full retrace to that low.